Good day, guys. Welcome to Forex Walker. Welcome to episode 74. Now, on this episode, we're going to be talking strictly about the US dollar and the rigging of the economic reports in the US. So, here, for those who trade the weekly time frame, this is the weekly. Those who trade the weekly time frame, this is the US dollar Swiss franc. So on the weekly time frame, what most of weekly time frame traders do is that they look at the bullish engulfing pattern. Like the bullish candle has to surpass, it has to go above the previous bearish candle, has to go above it. So they call it a bullish engulfing pattern. That means next week, what will happen is the trade will continue bullish. And for those, let me show you how I would hold this trade. Uh, let me look for a line like that. So for those who wish to hold this trade, you cannot hold it immediately from up there. You need to understand that the next weekly time frame candle that will open will pull backwards. It will go bearish first and then it will reverse and take off. So that's how I would tackle this trade. But most of my trades are taken using stop orders. Specifically, those are uh, uh, buy stops and sell stops, and I don't trade limit orders. So what I normally talk about is the first touch, second touch, third touch always manipulates and price takes off. So I don't need to wait for this weekly time frame candle to take over. I just need to look for that manipulation and set up my and I would set up. Let me show you. I would set up my buy stop. Let's say it manipulates like that. I would set up my buy stop here. And when the market reverses from wherever it decides to reverse, whether it wants to tap into the previous shoulder or perhaps this one, remember this previous shoulder is visible here, but this other previous shoulder here, the one you see down here, is actually visible on the lower time frame. So wherever it decides to turn around from here, it will tap me in and it will take off because I trade buy stop orders. I call them stop orders. So that's how I would tackle this trade. Let's go to the daily and look into the first touch, the second touch, third touch manipulates, and price takes off. Next week, when we create the new the new weekly time frame candle, it will reverse, and it might as well reverse all the way down here to the 23.6, the green line. 23.6. So whatever it decides, it will decide. But if you enter the market from here, you don't need to worry about what happens up there. So the market will decide where it gives you a pullback. Here you can see that you have a flip zone. Let me highlight this flip zone for you. Here you have a flip zone that was not tapped into, and you can see that the market actually rejected from it. So we'll see what happens when the market reverses before it takes off. Perhaps it might be below, it might be from this level here. As you can see, we have quite a number of a huge FVG. That FVG begins from here. So the market might want to reject within this level. Let me look for this. So the rejection might be within this level, and price will reverse from this flip zone here, as well as the FBGs here. So this is how I might tackle the trade, but normally I enter the market on what we call a drop days rally. So I normally trade at the lowest points and at the highest points. So let me just remove these drawings. So what is happening with the US dollar is that uh, in the United States, in fact, the US dollar was not supposed to give us this rally that you were seeing here. So what happens is that in the United States, they have a government shutdown. I in geopolitics, we know that the United States it gets most of its money by smuggling uh, minerals from other countries. They use the United Nations. Sometimes they use U.S. military bases. They plant them in other countries, and they send rebels into other countries, just like what is happening in Burkina Faso. So they send those rebels, even in the DRC, and when the government becomes afraid of being removed by those rebels, what they do is that they go back to the United States for help, and the United States comes back and they say, "We're gonna help you. We're gonna help you with. We're gonna bring our military base." And one, as they bring their military base, they're going to mine your minerals, and they're going to suck that country dry. So that those are just the systems that they use in the United States to make money. So most of those countries in Africa, like the Sahel regions, they decided to remove the U.S. influence, and the U.S. is actually trying to plant a United Nations base in Kenya, but we know that the United Nations military on that side will be the U.S. military base, and they're trying to get the minerals. They call it coltan. Those are rare earth minerals. They're getting them from Rwanda, and they're funding the rebels called the M23 to smuggle those minerals out of the DRC. So once you create a cut or a stop of the once you disturb the flow of minerals, most of those countries like France, they start experiencing load sheddings uh, and a lot of other things because of the mining of coal and all of these other things. So the United States at the moment, the economy had to introduce a shutdown, including France, because they're no longer getting those minerals. And we know that, especially in the DRC, most of the young people out there are dying. They just dig without using pillars. They mine without using mining pillars, and they just dig, and the mine collapses on them. Those young people, they end up dying, but they are paid almost nothing, and the money goes. The minerals go to Rwanda. Rwanda decides the prices, and those DRC young people, they end up dying in those mines, but they get paid almost nothing. And that's how the United States makes its money. Once a new president is elected, like the president in Burkina Faso, it disturbs the flow of minerals, and that's how those countries, the U.S. and France, are having issues in their economies, and that's just how the economic shutdown was introduced in the United States. That was because of new presidents being elected, just like in Botswana. The new president of Botswana removed a U.S. military base, and they decided that they want to uh, refine their own minerals before they export them. So what happens is that once they refine the minerals, they have the power to decide the price of the final product, and at the same time, they're able to create jobs for their people. Remember, a rock. they call it an ore. In an ore, there are all types of minerals. You can find silver, you can find platinum in the very same gold iron ore. In the same the ore that they use for gold. You can get all kinds of minerals before if you process it yourself. So that's how the United States ended up introducing a shutdown, and we have a country called Angola. It has it has oil in it, and we believe that and what is happening in Sudan will happen to Angola because Angola also has huge barrels of oil. In fact, the oil that is in Angola is more than that in Saudi Arabia. So yeah, the US is having a lot of issues at the moment. That's the reason why they had to introduce the government shutdown. And in that government shutdown, what they're doing is that they are halting some of the most important economic reports. So what they're showing you here is that it is the economic reports that are actually fake. That's why I say most of the economic reports coming out of the US are rigged. So if they keep hiding, uh, if they show, if they reveal those economic reports, what will happen is the US currency will actually collapse. It will move in the opposite direction. The reason why we are buying the US dollar at the moment, we're buying it because of the things that were spoken by the Jerome Powell, the chairperson of the Reserve Bank, the Federal Reserve. So he talked about the country not planning to introduce any interest rate cuts in December. So this market will actually go bullish for the duration of December towards January until they start talking about until they start talking about interest rate cuts next year. And the most important thing about those speeches that are made by the Reserve Bank is that they can actually tell you that next year they're having only one interest rate cut or only two interest rate cut. Now, those interest rate cut projections are going to tell you that the US currency is the most bullish currency for next year in 2026. So what you do, you listen to the speeches across different currencies like the Australian dollar and many other currencies, the pound, and you're going to create a table where you talk about the currencies that cut less interest rates, like a country that cuts once or twice in a year, that projects an interest rate cut once or twice in a year, and the other currencies that are expecting like five interest rate cuts or eight interest rate cuts for next year. What you do is that you're going to separate those currencies according to the interest rate cuts, and the currencies that cut less, you're going to place them above. Those are the long currencies. You're going to buy those currencies, and the currencies that cut more interest rates, those are the short currencies. Those are the currencies that you're going to be selling. So this is the system that I use to decide which currencies are good when you go long on them and which currencies are bad when you go short on them. So that's how I prepare my trading system for the whole year, and that's how you end up holding a long trade for a long time, uh, or a bearish trade for a long time. So thank you guys. I will see you on the next episode. Goodbye.